Impact analysis of Trump's speech. Anticipated 30% increase in global investment in climate tech, financial services, and international trade by Q4 2025. Introduction. The recent speech delivered by former President Donald Trump has sparked considerable discussion regarding its implications for global investment trends, particularly in climate technology, financial services, and international trade. Analysts are projecting a 30% increase in investment in these sectors by the fourth quarter of 2025, contingent upon the policies Trump is expected to implement. This report synthesizes insights from multiple sources detailing the anticipated effects of Trump's policies on market dynamics and investment confidence. Overview of the speech and its implications. On January 24, 2025, Trump addressed a gathering of business leaders and investors outlining his vision for economic growth and technological innovation. His speech emphasized the importance of deregulation, tax incentives, and a commitment to fostering an environment conducive to investment in emerging technologies. Analysts believe that his proposals could lead to a significant surge in capital directed towards climate tech and financial services. Key themes from the speech. 1. Deregulation and incentives. Trump reiterated his stance on reducing bureaucratic hurdles for businesses, especially those investing in renewable energy and financial technologies. The expectation is that these measures will stimulate investment and innovation. 2. Focus on international trade. Trump's commitment to revitalizing international trade relationships is expected to enhance market accessibility for U.S. companies, particularly in climate tech and financial sectors. This could lead to increased foreign direct investment (FDI). 3. Climate technology investments. While Trump's previous terms were marked by skepticism towards climate agreements, his recent speech suggested a shift towards embracing technologies that promote renewable energy and sustainability, albeit with concerns about regulatory burdens. Analysis of market reactions. Source 1, Reuters. According to a report by Reuters, market reactions to Trump's policies have been mixed. Investors are currently navigating a landscape of uncertainty, with many keeping a close eye on economic data that could signal shifts in policy direction. The article notes that there has been a bullish outlook among Trump supporters, anticipating significant gains in various sectors due to favorable economic conditions. Key insights. Investor sentiment. The report indicates that investor confidence is rising, with a notable increase in speculative investments in climate tech and adjacent industries. Economic data monitoring. Investors are prepared for fluctuations as they await concrete economic indicators that could validate or undermine Trump's proposed policies. Source 2, DD India. In a detailed analysis by DD India, experts expressed concerns about the environmental implications of Trump's policies. While acknowledging the potential for increased investment, they highlighted the risks associated with the U.S.'s stance on international climate agreements. Key insights. Environmental policy concerns. Experts warned that a lack of commitment to global climate initiatives could stifle international cooperation and deter investment in sustainable technologies. Call for renewable energy transition. The discussion emphasized the necessity for the U.S. to lead in the transition to renewable energy sources, citing that any regression in climate policy could undermine global efforts to combat climate change. Source 3, Reuters' second report. Another Reuters article focused on the speculative behavior of the stock market in response to Trump's presidency. The article posits that a resurgence of Trump could catalyze substantial gains in sectors like climate tech, driven by investor optimism around his economic agenda. Key insights. Speculative investments. There has been a noticeable uptick in investments within the climate technology sector as investors anticipate favorable policies that could drive technological advancements. Bullish market trends. The report suggests that Trump's leadership style incites a sense of optimism in the markets, potentially leading to increased capital flow into targeted sectors. Common themes across sources. Projected investment growth. All sources converge on the belief that Trump's policies could lead to a significant increase in investments in climate technology, financial services, and international trade. The anticipated 30% growth is seen as contingent upon the administration's ability to navigate domestic and international challenges effectively. Climate change concerns. While the potential for investment growth is highlighted, there is a prevailing concern regarding environmental policy. The juxtaposition of economic growth against the backdrop of climate change underscores a critical tension in Trump's proposed agenda. Market speculation and investor sentiment. The overall tone across the reports indicates a sense of optimism among investors, which is expected to drive market activity. Speculative behavior is likely to increase as investors position themselves to capitalize on anticipated policy shifts. Timeline of events. January 24, 2025, Trump delivers a speech outlining his economic vision focusing on deregulation and investment in climate tech. Q4 2025 projection. Analysts project a 30% increase in global investment in climate tech, financial services, and international trade. Post-speech market reactions. Following the speech, fluctuations in market performance are observed, particularly in sectors closely tied to Trump's economic agenda. Conclusion. The analysis of Trump's recent speech reveals a complex interplay between anticipated economic growth, environmental policy concerns, and market sentiment. The projected 30% increase in investment by Q4 2025 underscores the potential for substantial shifts in the investment landscape driven by Trump's policies. However, the concerns raised regarding climate change indicate that the path forward will require careful consideration of both economic and environmental impacts. As investors and policymakers navigate this evolving landscape, the implications of Trump's agenda will continue to be scrutinized, with the potential for both significant advancements and challenges in achieving sustainable growth. The anticipated impact analysis of Donald Trump's speech predicting a 30% increase in global investment in climate technology, financial services, and international trade by Q4 2025 presents several counterintuitive insights. 1. Investment growth amid environmental concerns. While one might expect that environmental advocacy and sustainable investment would stagnate under a presidency associated with climate skepticism, the analysis suggests that Trump's policies could spur investment in climate technology. This is counterintuitive because it implies that investors may prioritize economic growth and market recovery over environmental commitments, indicating a complex relationship between political leadership and ecological initiatives. 2. Bullish market sentiment. Despite policy uncertainty, the analysis reveals a bullish outlook on stock market performance despite the known policy uncertainties associated with Trump's leadership. Typically, market confidence thrives on stability and predictability. However, in this case, investors appear willing to take risks, anticipating that Trump's administration might favor deregulation and economic stimulation, which could lead to unexpected gains in sectors like climate tech. 3. Perceived economic benefits of controversial policies. The expectation that Trump's controversial executive orders could lead to substantial investment growth is particularly striking. Such policies often face criticism for undermining international cooperation on climate change. Yet, the analysis indicates that investors might interpret these policies as opportunities for innovation and profit, suggesting a divergence between ethical environmental considerations and financial motivations. 4. Optimism despite expert caution. Experts from various sources express concerns regarding the long-term implications of Trump's environmental policies. This juxtaposition of expert caution against a backdrop of market optimism illustrates a disconnect between informed analysis and speculative investment behavior, hinting that the market might be driven more by short-term financial incentives rather than long-term sustainability. 5. Climate tech investment as a political tool. The discussion implies that climate technology investment could be harnessed as a political tool to rally support for Trump's administration, even if the underlying policies may not align with traditional climate advocacy. This suggests a strategic use of investment rhetoric where economic growth is emphasized to garner political favor, challenging the conventional view that environmental priorities typically lead policy agendas. 6. Investor sentiment as a wildcard. The market's speculative behavior, as noted in the analysis, points to the idea that investor sentiment is a significant wildcard in economic forecasting. Despite potential negative impacts of Trump's policies on international climate agreements, investors may still perceive opportunities for profit, highlighting the unpredictable nature of financial markets in response to political events. 7. Temporal disconnect. The timeline establishing a projection for Q4 2025 indicates a belief in delayed effects of policy changes. This raises questions about the immediacy of economic impacts from political speeches and actions, suggesting that investors may be looking beyond current conditions to future possibilities, which is a departure from typical short-term investment strategies. These insights reveal a nuanced understanding of the relationship between political leadership, environmental policy, and investment behavior, challenging conventional expectations of how such dynamics typically interact. The analysis of Donald Trump's anticipated speech and its projected impact reveals several critical points that are significant yet easily overlooked. These points not only provide insights into the potential economic landscape but also highlight the underlying complexities of climate policy and market behavior. Here are the most important aspects that may be overshadowed in typical discussions. 1. Economic policy versus environmental responsibility. A common thread in the reports is the dichotomy between economic growth and environmental sustainability. While the projected 30% increase in global investment in climate technology, financial services, and international trade suggests a positive economic outlook, it is crucial to consider how these investments align with environmental goals. Many analyses emphasize the potential for economic growth but often gloss over the implications of Trump's historical approach to climate policy. Significance. This juxtaposition is significant because it raises questions about the sustainability of the projected growth. If investments in climate technology are not coupled with stringent environmental regulations, the growth may not lead to meaningful progress in combating climate change. Stakeholders must critically evaluate whether the anticipated increase in investments will prioritize long-term ecological health or short-term economic gains. 2. Investor sentiment and market speculation. Another critical point that may be overlooked is the role of investor sentiment and market speculation in driving the anticipated investment growth. The reports indicate a bullish outlook among Trump's supporters, suggesting that market behavior is heavily influenced by political sentiment rather than fundamental economic indicators. This speculative nature can lead to volatility in investment markets, particularly in sectors like climate tech that are sensitive to policy changes. Significance. Understanding the speculative nature of investment in response to political developments is essential for investors and policymakers alike. It highlights the risks associated with relying on political narratives to drive economic decisions. If investor sentiment shifts rapidly due to policy changes or political instability, it could lead to abrupt market corrections impacting the very sectors expected to see growth. 3. The role of international cooperation. Source 2 emphasizes the critical need for international cooperation in addressing climate change, which is often underappreciated in discussions about domestic policy. Trump's historical stance on international agreements such as the Paris Accord has raised concerns about the U.S.'s commitment to global climate initiatives. The potential hesitance to engage in cooperative efforts could undermine the global investment landscape in climate technology. Significance. This underscores the importance of global collaboration in tackling climate issues. The anticipated growth in investment may not materialize if international partnerships are strained. Investors and companies looking to capitalize on climate technology must assess the geopolitical landscape and the implications of U.S. policies on global alliances. A lack of cooperation could stifle innovation and limit the effectiveness of investments in sustainable technologies. 4. Impact on emerging markets. The expected increase in investment in financial services and international trade raises questions about the impact on emerging markets. As the U.S. potentially shifts its focus towards climate technology and financial services, emerging economies may either benefit from increased investments or find themselves at a disadvantage if they cannot meet the technological and regulatory standards set by U.S. policies. Significance. This aspect is significant because it highlights the ethical considerations of investment strategies. Investors should consider the broader implications of their investments on global equity and the potential for widening gaps between developed and developing economies. Sustainable investment practices should include considerations of social responsibility and equity to ensure that emerging markets are not left behind in the transition to a green economy. 5. Long-term versus short-term gains. The focus on projected growth by Q4 2025 may lead to an oversight of the long-term implications of Trump's policies. While immediate investment growth is anticipated, the sustainability of these gains is uncertain. Short-term policies may lead to rapid investment increases, but if they lack a foundation in long-term strategy, the benefits may be ephemeral. Significance. This point is crucial for both policymakers and investors. A focus on short-term gains can lead to decisions that prioritize immediate returns over sustainable growth, ultimately jeopardizing the future of industries essential for combating climate change. Stakeholders must engage in strategic planning that considers not only immediate economic impacts but also the long-term viability of investments in climate tech and other sectors. 6. The influence of media narratives. The contrasting tones across different sources reflect the broader influence of media narratives on public perception and investor behavior. The neutral reporting of Source 1 versus the caution expressed in Source 2 illustrates how media can shape the discourse around Trump's policies. The framing of economic opportunities versus environmental risks can significantly influence investor confidence and market dynamics. Significance. Recognizing the power of media narratives is essential for understanding market behavior. Stakeholders should critically evaluate the sources of information they consume and consider how narratives may bias their perceptions and decisions. A more informed public can lead to more responsible investing and policymaking, ultimately fostering a more balanced approach to economic growth and environmental stewardship. Conclusion. In conclusion, the anticipated impact of Trump's speech on global investment in climate technology, financial services, and international trade is layered with complexities that merit deeper exploration. While the projected economic growth is promising, it is vital to consider the broader implications for environmental sustainability, market behavior, international cooperation, and long-term strategies. Stakeholders must navigate these dynamics thoughtfully to ensure that the projected benefits contribute to a sustainable and equitable economic future. 1. Projected investment growth. The analysis underscores a significant anticipated growth in global investment, particularly a 30% increase in sectors such as climate technology, financial services, and international trade by Q4 2025. This projection is largely attributed to Trump's policies and the economic optimism surrounding his leadership. Understanding the factors contributing to this expected growth can offer insights into market dynamics and investor behavior in response to political shifts. 2. Environmental policy implications. The discussion highlights a critical tension between the projected economic benefits and concerns regarding environmental sustainability. Experts warn that Trump's approach to climate change and international agreements might undermine efforts to address global emissions. This point raises important questions about the balance between economic growth and environmental responsibility and how policies can be aligned to achieve both objectives. 3. Market speculation and investor sentiment. The analysis reveals a notable correlation between Trump's leadership style and heightened market speculation. Investors appear to be banking on potential economic policies that could stimulate growth, particularly in climate tech and financial sectors. This point merits further exploration into how political climates influence investor confidence and market trends, as well as the implications for long-term investment strategies. 4. Diverging perspectives on policy impact. The sources present varied viewpoints on the implications of Trump's policies. While some emphasize the potential for economic gains and innovation, others express concern about the negative ramifications for climate initiatives and international cooperation. This divergence illustrates the complexity of Trump's impact on global investment and highlights the need for a nuanced understanding of how political decisions can have multifaceted outcomes across different sectors. 1. The New Deal 1933 to 1939. Franklin D. Roosevelt's New Deal was a series of programs and policies implemented to counteract the effects of the Great Depression. It aimed to provide immediate economic relief, recovery, and reform. The New Deal resulted in significant federal investment in infrastructure, social welfare programs, and job creation, leading to a transformative impact on the American economy and society. This historical case is similar to the anticipated investment growth outlined in Trump's speech, as both involved government intervention to stimulate economic sectors. 2. The Marshall Plan 1948. Officially known as the European Recovery Program, the Marshall Plan was an American initiative to provide aid to Western Europe after the devastation of World War II. It aimed to rebuild war-torn regions, remove trade barriers, modernize industry, and improve European prosperity. The plan resulted in substantial investments that revitalized European economies and fostered international trade. The anticipated increase in global investment in climate tech and financial services mentioned in Trump's speech can be likened to the goals of the Marshall Plan in terms of promoting economic growth and international cooperation. 3. The Industrial Revolution 18th to 19th century. The Industrial Revolution marked a period of major industrialization and technological innovation that began in the late 18th century. It led to significant economic growth, urbanization, and changes in labor practices. The transition from agrarian economies to industrialized ones generated vast investments in manufacturing and infrastructure. Much like the projected increase in climate tech investments, the Industrial Revolution was characterized by a surge in capital allocation towards new technologies and industries, fundamentally changing global economic landscapes. These historical cases exemplify how government initiatives and market dynamics can drive substantial investment in economic transformation, resonating with the themes presented in Trump's speech regarding anticipated investment growth in specific sectors. Future outlook: anticipated 30% increase in global investment in climate tech, financial services, and international trade by Q4 2025. Overview: the economic landscape is poised for significant shifts as a result of Donald Trump's recent speech, which has sparked predictions of a 30% increase in global investment in climate technology, financial services, and international trade by the fourth quarter of 2025. This analysis synthesizes various perspectives on the implications of these anticipated investments, focusing on market dynamics, environmental considerations, and the geopolitical context. Market dynamics. 1. Increased investment in climate tech. The projected surge in investment is expected to be driven by a renewed focus on climate technology. As global awareness of climate change intensifies, investors are likely to funnel capital into innovative solutions aimed at reducing carbon emissions and enhancing energy efficiency. This shift could lead to the emergence of new companies and technologies significantly impacting traditional sectors. 2. Financial services resurgence. The financial services sector stands to benefit from increased capital inflows. With a focus on sustainable investment, financial institutions might innovate in green financing such as green bonds and ESG, environmental, social, and governance investing. This could lead to a more integrated approach where financial products are aligned with environmental goals, attracting both institutional and retail investors. 3. Boost in international trade. An anticipated increase in international trade could be driven by policies promoting global supply chains and trade agreements. Trump's administration may favor policies that encourage exports of climate technology and services, thereby enhancing the competitiveness of U.S. firms in global markets. This could also lead to a diversification of trade partnerships, particularly with nations prioritizing climate initiatives. Environmental considerations. Despite the optimistic economic projections, concerns regarding environmental policy remain salient. Critics argue that a focus on economic growth under Trump's leadership may undermine global climate agreements and efforts to reduce emissions. The following points summarize the key environmental concerns. 1. Impact on global climate cooperation. Experts warn that Trump's approach could hinder international collaboration on climate issues. If the U.S. were to withdraw from or minimize its commitment to global climate agreements, it could discourage other nations from pursuing ambitious climate goals, thereby stalling global investment in sustainable technologies. 2. Long-term sustainability versus short-term gains. While immediate investments in climate tech may surge, the long-term sustainability of these initiatives could be jeopardized if policies do not support ongoing innovation and development. There is a risk that without robust regulatory frameworks, investments may prioritize short-term returns over long-term environmental benefits. 3. Role of renewable energy. Transitioning to renewable energy sources is critical for the success of climate tech investments. Future policies must prioritize the development and integration of renewable energy to ensure that investments lead to tangible environmental benefits rather than merely financial gains. Geopolitical context. The geopolitical landscape will play a crucial role in shaping the future of investments in climate tech, financial services, and international trade. 1. Strategic alliances. As nations navigate the complexities of climate change, strategic alliances centered around climate technology could emerge. Countries leading in renewable energy innovation may collaborate with U.S. firms, creating a global network that enhances technological exchange and investment opportunities. 2. Trade wars and tariffs. The potential for trade wars or the imposition of tariffs could disrupt global supply chains and affect international trade dynamics. Investors must remain cognizant of geopolitical tensions that could impact market stability and the flow of investments. 3. Regulatory landscape. The evolution of regulatory frameworks around climate and financial services will significantly influence investment patterns. Investors will need to adapt to changing regulations, which may either facilitate or hinder investment opportunities in the climate tech sector. Conclusion. The future outlook for global investment in climate technology, financial services, and international trade is characterized by both optimism and caution. A projected 30% increase by Q4 2025 reflects a significant shift in investment sentiment driven by Trump's policies and the global urgency surrounding climate change. However, the interplay between economic growth, environmental sustainability, and geopolitical factors will ultimately determine the trajectory of these investments. To maximize the potential benefits, stakeholders must prioritize long-term strategies that align financial interests with environmental goals. This approach will not only foster innovation but also ensure that investments contribute to a sustainable future. The coming years will be critical as the global community navigates these challenges and opportunities, shaping the investment landscape for decades to come.